So I'm laying in bed last night and I get a text from my brother who's also in he's in the insurance space. And he was like, hey man, have you seen that Kyle Busch? Have you seen Kyle Busch's Twitter account? I was like, no, I haven't, because I don't do social media like that, which is funny because here I am on social media. But he's like, you got to check it out. So I've got it here for us. Let's look at it together. Number one, I'm excited about this and I'm hurt by this because we see this every day. Like literally we see this every single day. And so I'm excited because someone like Kyle Busch is going to be able to help us change this industry. And I'm sad that he was caught up in many of the things that we see. So let's just look at this. He says, we've always tried hard to make the hardest chapters of our life their setbacks and use them for good. And they've been open about that, he and his wife. And so, commend them for that. Today, they're sounding the alarm on hidden insurance scams involving policies sold by Pacific Life. So first and foremost, I'm kind of shocked that Kyle Busch is calling out a company by name like that. That's interesting to me because it makes me think that, he's not scared, and that's commendable. More than likely, they probably could have gotten some kind of settlement out of a company like that if they were done wrong. And the fact that they're calling them by name makes me think that they're electing to sound the alarm versus try to collect damages, or maybe they couldn't. I don't know. They're sounding the alarm on Pacific Life. These are being pitched as smart retirement planning or a way to set up your children's future, but too many families are being misled and left with devastating financial loss. It's true. We see it every single day. So many people are out there talking about these policies, and they have absolutely no idea how to structure them, how to set them up so that they're actually successful. Most often what we see when working with people that are selling these policies is they're set up for maximum commissions. This is something that we talk about all the time on this channel, actually. These policies being set up for maximum commissions, and it does the consumer more harm than good in a lot of cases. But he goes on. It's not just public figures, it's everyday hardworking Americans who trusted the system. We're sharing our experience so that others don't have to go through this without warning. We were misled. If you've been approached, here's the kicker. If you've been approached with a no-risk retirement plan tied to an index universal life insurance product, run. And that sentence tells me exactly what it is that they were pitched. I know what they were pitched. I shouldn't say I know. I have a sinking suspicion, knowing that they specifically called out Pac Life and knowing that they said if you were approached with a no-risk retirement plan tied to an index universal life, and knowing that it's Kyle Busch and he's a high-profile person, I almost guarantee you that they were pitched premium finance. They were pitched premium finance. It was structured poorly. I almost bet I know who the lender is. Okay, they were probably pitched premium finance. It was structured poorly for maximum commissions. They probably got into it when interest rates were super low. They were told it was a risk-free, no-risk investment. Nothing, it's not going to require anything out of you. All you have to do is sign right here. And then interest rates went up. Policy performance went down. Collateral requirements ballooned, and now they're upside down on a policy that was supposed to be absolutely no risk, bulletproof, setting their kids up for success into the future. And since he's Kyle Busch and has the ability, they probably borrowed a bunch of money. They're probably way upside down on this policy. And I'm excited that he's talking about this. I'm sad that it happened to him because we see this every day. We see this happening to the hardworking Americans who can't deal with these types of losses. And man, we've made it our mission to talk about these things and make sure people know exactly what they're getting into. There's a place for every tool that's in the tool bag. But if you're being told that a hammer is actually a sawzall, or maybe the other way around would be more appropriate. If you're being told that a sawzall is a hammer, then you don't know how that tool can actually hurt you, right? You think it's a hammer. There's not much risk in this hammer. You just swing it. Keep your fingers away from it. You'll be fine. Well, you don't know that it can take an arm off that's a problem. And we see this time and time again in this particular industry. I just want to point out some of the videos that we've done already. Resources that can help you, let you know, and navigate these waters. These policies are a fit for a lot of people. High income earners who are looking for a place where they can get pretty decent returns with much less risk than investing in the market. Ernst & Young came out with a study that showed how annuities and life insurance are a great complement to a retirement portfolio, especially in replacement of bonds. We've got that EY article. If you can't find it, well, you can do a Google search and you can find it. But we've been sounding the alarm on these policies for a long. You might notice that I'm standing now. I just went through all these videos that we have talking about this, and I actually had the audio turned on. So it was just like me talking over 15 different videos. Like I had all these tabs pulled up. I have all these tabs pulled up and they were all playing these videos that I wanted to show you guys. And all the audio got recorded. So it's just like mashed up audio. It's a little bit of a bummer. But what I wanted to say is like, this is what we've been talking about for years. We have been talking about Kyle Busch's exact situation for years and years and years. Our whole channel is dedicated to cash value life insurance, doing it the right way. We've got entire playlists on premium finance. I think we have 2 playlists actually on premium finance. We've got a playlist on bad policy designs. We've got specific videos, the charges, don't get ripped off. Charges of an IUL, don't get ripped off. How to get the policy design right. We've got all the fees that are explained. We've got the pros and cons. Is it good or is it bad? How to not structure your premium finance policy. Like all this stuff is out there. Premium finance risks. We've got a whole video specifically designed for the risks of premium finance, which is exactly, I'm sure, what happened in Kyle Busch's case, a bad premium finance design. And here's one that we're looking at right now. We've got videos on, is it too good to be true? Like the premium finance playlist is filled with gold. And if you're experiencing or being pitched a premium finance life insurance policy, you absolutely have to check this out. You have to make sure that you get it right. Getting it wrong can be catastrophic. In fact, Craig in our office sent me over the lawsuit filing in Kyle Busch's case, and it said something like they lost $8.5 million. It doesn't have to be like that. It doesn't have to be like that. These things, here's a terrible premium finance policy design. This is actually probably similar to what he was pitched. They're borrowing $650,000 a year for 10 years. The client's out-of-pocket cost, $17,550 in year one, $17,550 in year one. That's their out-of-pocket cost. Talk about no risk. And they're showing like a $1.5 million income stream. And their out-of-pocket cost is $17,500. Like, that's not real. It's not real. It was never going to be real. Bad interest rate assumptions, bad collateral projections, probably overinflated policy performance. And if you buy into something like this, you will get hurt. That doesn't mean that the tool is a bad tool. It means that whoever's using the tool is using it incorrectly. So I commend the Busch family just for being open about this and being public about this. Like, this is painful stuff. And I feel bad for them because I know the sales pitch. I've heard it time and time again. People come to us every single week saying the exact same things. And in a lot of cases, excuse me, camera, in a lot of cases, we have to unravel bad designs. And that can be difficult to do. In some cases, it's impossible. So here's what you need to do. If you're still watching this video, you're one of the true believers. Here's what you need to do. If someone is pitching you premium finance, or if you're considering cash value life insurance as a wealth protection strategy, a wealth building strategy, an asset protection strategy, you need to book a discovery call with our team. This is what we do every single day, day in, day out. A 30-minute discovery call is going to give you tons of ammunition to know whether or not this is going to be a good strategy for you and your family. Our whole ethos, the way that we do business, our job is to arm you with enough information so that you can make an educated, wise decision with your hard-earned dollars. And our guarantee for you is this: if you go through our process discovery call, followed by a video review that we put together. We send it to you, and then a follow-up meeting. Our guarantee is that you will get all of your questions answered, and you will know if this is a good tool for you and your family based on your goals and needs. Go to leveragedwm.com. Up at the top, you'll see book a meeting, contact us. There's a bunch of ways you can get in touch with us. We've been here for a long time. We're a known entity. I implore you, if this is something you're considering, book a discovery call. Let us shepherd you through this process and make sure that you end up with something that you're really proud of, or if it's not right for you, turn you away from it entirely. Talk to you soon.